I take my longest break at 36 years and I come back and the market's in the same place, what are you guys doing? Are you just buying and selling, buying and selling, buying and selling? No clear direction in the market? I will say, not a good day yesterday. That's for the open. I did catch that. But you know what? We're in earnings season. We got to talk about the chip stocks. I know Dennis is getting ready to buy the dip in these. I'm not so sure about that. We got Thomas Browne from Gabelli Funds coming on, a new guest at 8:35. We're just going to cover everything. We're going to cover J&J, up $7 on that deal. Maybe not a bad deal for J&J. Let's go, folks. It's Tuesday. I'm fired up to work the next 4 days. It's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the up to right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, these wonderful charts are brought to you by Trade Station Securities, born to trade. Chart, analyze, customize, all on one platform. Trade smarter, move faster, and stay in control with the platform. Built for serious AI, bullish and bearish traders. Let's run down the big board S&Ps all over the place. Got a good level on the downside. We'll discuss later in the show. We're up 3 handles, 74.51. Whew, the buck. Wow, up over 101. That's a rally here. 101.42, testing the high of the move back from June. TLT, is it off the mat? Yeah, found support at 83, up 17 cents, 83.92. USO, that was too good to be true when it got down to $100. Little escalation up, pulling back 53 cents, 124.13. How's GLD? GLD and SLV, they're still hanging out just low in the move. Not looking perky at all. Both down 1.5% for the GLD, 2% for the SLV. And Bitcoin, oh, you Bitcoin bulls, you were going 65K brings you 70. 65K brings you 70. Nope. Back down. You're down $1,560 at 63,415. If I say I didn't miss these guys, I'd be lying. So let's bring them to the stage. Dennis, how you doing? How is you were you weren't the Dennis of Dennis before I left. Like, I'm coming back, and you're new. You got new trading strategies. You got a new attitude for the market. You're not going to complain.
Well, it's the new attitude, but I'm back. Trading account made new all-time highs yesterday. The IBM debacle is officially behind me. That was my worst trading loss in my trading career. It took me 2 weeks to get it back, but it's over. It's done. I'm back. And you're back too. And you know what? We can say, thank goodness Joel is back, because we know when Joel is away, the market goes down. But then Josh Walter debunked it all. And I still don't believe the data. But on the average, what Josh found out when he back tested all the data was that on the average day that Joel is gone, the S&P's actually increased 0.3%. So you being away, the stock market plays and goes higher, Joel. Selective perception says that data is nonsense.
Did you ask him how he got the data?
I don't know. I think he made it up, because we don't believe it. We don't believe it at all. We even saw the chip wreck yesterday. So can Joel save the chips? Even his title, Joel came up with the show because I'm ready for like Chipwreck. Brentster is ready for like hardware hangover. Joel's like, no. Chips are down, but are they out? So he's already coming back bullish here, folks. So
I wouldn't say that. No.
Jim Cramer said you got to sell all your chips last night as well. So we got a double indicator.
Really?
Joel's bullish. Cramer is bearish. Who's going to win? I'm going to put my money on Joel.
Man, I did not want to go into this today. Maybe I'll just go it briefly. But while I was gone, I did sell some chip stocks. I did.
Oh, you couldn't take it.
I couldn't take it.
You finally talked to the committee. You made an executive decision.
The investment committee
decision to get rid of your SanDisk.
No, not all of it. No.
I
know.
We got something here.
Was it all your selling that knocked the chips down? Is this?
I don't know.
So
I
it
don't
wasn't this, bogus China headline. It was actually just the whale of Joel Elconin and Elconin dumping their chips. That's what happened yesterday?
No, it was, I can't do it all in one day, Dennis. I mean, I have to spread it out over a couple weeks, to get the entire position out. But no, I just, folks want to talk what's moving now and stocks and earnings and everything. I don't want to go into all this right now. Maybe we'll go into it to the think tank, because I have a different mode of thinking of investing right now.
What do you mean? Talk to me about your investing.
You can't tease that. Well, maybe you can. Maybe we save it for the think
let's
tank.
save it.
I like it. We'll give us some more of a tease.
All right, we'll put it this way. I'm not really buying anything. I'm not buying it. I'm not
You're
starting
just a
new.
seller.
I'm just a seller. I'm a net seller.
This is fine.
And
this is fine.
Okay.
This is allowed.
Of good stuff and bad stuff. And the bad stuff, I just gotta put it somewhere else and have it perform.
Out of sight, out of mind.
If the bad stuff I've had hasn't performed right now,
I got this horrible trade on. Just transfers to my investing account. Never look at it
again. Yeah, that's no. I just, because the upside. I mean, maybe there's 10,000 in this market, another 2,500 on the upside. I don't think so. Neither do I think there's 5,000, on the downside. I don't know. I just kind of got this feeling where it's just time to just clean things up. Just clean, and it's a little bit early, right? For start some tax and year-end tax selling, but then it's never too early to start cleaning things up, and that's just it. That's just
like it, Joe.
Yep, that's just my fly. And
you go away for a week, you get a fresh headspace, and you come back and you maybe realize something. I like it. I like it.
Thinking about it, but you know what? Can I go on one small tangent?
Yes.
I may need to leave pre-market prep for the senior golf tour.
Yeah,
you're that good.
Good couple rounds.
Are you that good? Did you school Pete?
Well, he was in the group behind me. Dude, I didn't realize this is the wildest story. There's two tangents. You guys are going to get really mad. Yeah. So on a shotgun start, everyone goes from a different hole.
Sure, yes.
Right. So we started 14, and I'm driving out on my cart, and this guy comes by in a cart going the other way. And I'm like, I know that guy. I know that guy. And I couldn't place it. And I'm like, it bothered me the whole round. I said, at the reception, I'm going to go up to this guy. I'm going to find this guy's name. On the last hole, the group in front of me, I did lose my 3-wood. Don't ask me how I lost my 3-wood. They come up, and I go, what's your name? And he goes, Peter. And he goes, Joel. I'm like, yeah. And it's Dennis's best friend from Canada.
Yeah.
Was at the golf outing in the group behind me. And so I had a good time with him.
He made the rings for the
the rings for the event. His lovely
ring man,
wife,
Baron Rings.
Yep, lovely wife. But
the
reason I'm leaving PMP to go on is because I played with my brother-in-law, who's a little younger than me. I played with a former WBO welterweight champion, Bronco McCart from Monroe, Michigan, and my nephew. Nice. We used 90% of my drives. And on a par 5, it was 520.
You're cranking like 320.
On a par 5, I was on in 2 with a drive, a decent drive of like 280, 290. And then I didn't even hit my 3-wood good. It was like a low, liner, just on the green in 2. I missed
so Joel
form.
Has now got this figured out. He's going to make all of his money on the senior tour, and he doesn't need Stock Trader Network anymore. So unfortunately, that's our loss.
Maybe we're going to have to go back to the drawing board.
We better get off the golf stories here.
Yeah,
so
Coach is always complaining. Coach 4618.
Yeah. I don't blame him. I'm complaining. Too much golfing. We need less golf talk, more chip talk. So you're talking here. You sold some chips. The market sold some chips. everybody was selling a little bit of chips yesterday and definitely was predictable. So we have this headline that everybody's attributing yesterday's fall to, but rotation said that we were likely going to sell off in the chips. I said this, I believe I said on PMP, but we went into detail in the think tank on it.
Yeah.
And we saw this before where when we have oil rally, which is basically oil down and all these value stocks up, we often see the chips go the other way. And we've seen the opposite thing. When oil is strong and the chips are down, then the chips start to buy, because we said the chips don't care about oil. Just remember that. Chips don't care about oil. So when they were buying up SanDisk and Micron 2-3% in the pre-market yesterday, it didn't make any sense because they're buying this on lower oil prices. It doesn't make any sense.
Doesn't make sense.
So if there was going to be rotation, it was likely going to come out of the chips, and it absolutely did. They opened the market at 9:30, and the chips and the hardware stocks went straight down. SanDisk opened at the highs, straight down. Micron opened at the highs, straight down. Applied Materials opened at the highs, straight down. NVIDIA had a hellish day. Stock was down $10 yesterday after being in consolidation station here. I still own that one in the long-term portfolio, but I mean, it was a really ugly day. All day, selling did not relent. All night, the selling has not relented. We continue to go down here this morning. Hardware names too. Celestica comes out last night. We're going to tie all this in together, Brent, here to make up the time for the golf story. Celestica, CLS. I'm joking, Joel. CLS comes out, blows earnings away, raises guidance. Stock runs all the way to 351, but it's hardware. And we hate hardware now. And look, it held up all night, but then starts leaking this morning, and has now turned red and given it all back. We are in a sell the rip camp here. So Celestica did nothing wrong. The earnings were fine. The media will come out and say, oh, but they didn't like this, they didn't like that. No, they don't like hardware right now. That's the story. So what was this headline yesterday they were trying to attributing it all to? When it was rotation was the main culprit, but they were trying to say is China is going to create chips and they're going to put all our chip makers out of business. Is this what this was, Mr. Slava?
And interestingly, in bringing it up, you're bringing up a good point here, because people are talking about this today. This was out yesterday morning. This information article, China begins mass production of homegrown DUV chip tools. This was out around right now yesterday. So did we have this? Arguably, some are saying today, huge report out yesterday that no one was responding to yesterday.
And now they're all saying it's a sell-off. SK Hynix is down here now too. Everybody's
and the implication here is okay. So this is on this is related to lithography. It's basically like stamping effectively some of the designs onto chips. This is something that ASML does for a large majority of the world, including China. This report from yesterday morning said that China is now getting some inroads into this lithography technology and may use ASML less. So ASML is down a bunch from yesterday, and it is continuing lower today. It's down about 7 or 8% from where it was trading yesterday morning. Fee wanted to make a little bit of a disclaimer here in saying that, yes, China is getting some indications to this lithography technology. However, it's like not great technology. This is like concerning technology compared to what ASML has to offer. So again, this is what the publications are saying. The stocks are down, the chips are down on. We saw it happen yesterday in front of us, where we felt that this rotation was going to be happening. Keep that in mind.
Yeah. Well, and the rotation did happen, and it's media attaching an article to a move. But I mean, it's going to be competition for China. Absolutely is going to be competition here. That is sitting back there. Look at the stuff they're doing. We know this is a battle between China and the U.S. basically to who's going to be the AI leader. You see some of the stuff that they're doing over there. It's pretty impressive here too. So it's absurd to think that we're not going to get competition from China. Oh my gosh, competition coming. Of course there's going to be competition. But the bottom line here is that this was crowded trades 101, Joel. I mean, everybody was piled in here. You had people, everywhere in social media talking about Micron's 8 times earnings. How can you go wrong at $1,200 a share? It's cyclical business. You guys don't understand cyclical businesses. Actually, when the P's go really low, is the best time to sell them, because that means the cycle's probably turning here. Now, it doesn't mean it's necessarily turning, but these were crowded. Stocks don't go from $80 to $1,200 in a straight line. We're back at $800. SanDisk going from $40 2 years ago to $2,000, $2,300. Now we just had a 50% off sale here because we're down to $1,100. But I mean, the stocks don't go straight up like this. Could there be a buying opportunity here? Yeah, there'll be buying. There's been buying opportunities in this downtrend. But Joel, talk to us about the technicals here. Start with SanDisk
boy, there's so much here. There's so much here.
Start chewing on it.
First of all, didn't China like quit DeepSeek or something? Like
I don't know. Remember the DeepSeek moment? We were down 5%.
No. The DeepSeek something. They suspended a funding round because of something. Did you guys see that?
No, I don't.
No,
I don't.
No. Did you see the NVIDIA executive got arrested in Taiwan over chip stealing? Did you see that? No.
No.
Man,
you know what? I'll tell you
where are
what's
you getting your news? Got to go to Stockshare Network.
Yeah.
These are rumors here that are like probably not material.
I've seen about other news. You know what's going on with the chips? They're too expensive.
Like
too expensive.
Like a microchip itself is too expensive.
Yep.
I mean,
well, everything is too expensive. You can go across the board. It doesn't stop the consuming, and it doesn't stop the capex from all these big companies like Google. Last week announced another $25 billion in capex. Hasn't slowed that down yet. But there is a point here where, if companies, continue to be punished for CapEx spending, and this is an if, does it eventually get to the point where companies are reluctant to actually, continue to increase their CapEx, because it's been short-term pain. They hope for long-term gain, but we've known Oracle has been the worst story of this whole thing. Google's been punished severely for the CapEx spend. Meta's been punished severely for its CapEx spend. I mean, is it a certain point where there's like, okay, maybe we shouldn't be spending so much on CapEx because the stock market doesn't want us to do it? Or do they just ignore the stock market, all these companies, and go? I mean, that's the big question here, because if the CapEx spend slows, all these companies that are receiving money, like the Microns and the SanDisks and the AMDs, and, you can go even into, obviously all of them, like there's 100 hardware names, but, you can dig into all those. All the receivers are going to probably go down. So they're definitely, we saw even when Google announced the CapEx increase, Brent, that night, Celestica exploding higher, Broadcom exploding higher, because they're going to receive that money.
Yep.
So, I mean, this is the concern. This is the overall bear thesis for the hardware trade, is that the CapEx spending will slow down here eventually, and then some of this maybe pull forward, and the demand could actually drop then. That would be the bear thesis. I'm not saying it's going to happen, but that's what you're kind of saying, Joel, correct?
Yep, that's what exactly. I mean, they could spend and spend and spend, and of course, supply, you can't get enough of it. I mean, dynamics in supply and demand and prices always seem to work themselves out, right? One way or another. They get to the extremes, they stay at the extremes for a long time, but then they revert. But I just overall, this whole chip thing, I wanted to bring up a chart, and this is the chart of charts when it comes to the chip stocks. And it's NVIDIA. And we taught this thing loves to go into a trading range. Like, what's the catalyst? What's the next thing? And I should have put this on before, but I was trying to figure out what this multi-month trading range is going to look like. And I thought 190 looked like really good support. They didn't quite get there. All right. And then I thought like 210. I thought, man, that could be, well, it's stuck over 210 a few times. But I think if you're looking, because we can look at Broadcom, we can look at all these things, we can look at consolidation. I think you're in this trading range. I think as long as 190 holds up on the downside here, and we're down again, get near that area, I think it's, pretty much the sign is going to remain the same, because I still look at this as the leader. This starts.
I wonder, Joel, and to your point here, sideways for the win, because the trend is your friend, and we were talking about this on the S&P. We talked about this last week. I mean, everybody wants to know, is the next move higher or lower? You got bulls saying, yeah, we're going to break out. We've had rotation here helping. Value stocks are picking it up. We're going higher. You have bears saying there's a chip wreck happening here. You know what would hurt the most people and what would punish the maximum amount of participants? Sideways. Continued chop. What have we done for the last 2.5 months on the S&P? Well, we were in the same price. Joel, we were in the same price when you left 7 days ago. We're in the same price we left 2 months ago.
Yes.
It's been sideways trading. And how do you trade a sideways market? You sell rips and you buy dips basically on everything. Celestica, fantastic earnings. Oh, we're going to break out here. Look at the numbers. They're so good. Oh, the earnings, the rally is gone by the time we even open the stock. Why? Because we're in a sideways trending market. We're in a market that has no direction. The S&P has no direction right now. Well, it does. It's sideways. The direction is clearly sideways. Sell rips, buy dips, until further notice. That's how I'm trading it. That's how I'm turning my month around.
Look at it. Look at this weekly in NVIDIA. Look at this. Look at this period that you had. Remember 170 to 1. Yeah, you could say, oh, Joel, it went on 190 here. Oh, it went below 170 here. But look how long you had that trading range. Look at that.
Yeah.
Nauseating from the middle of 25 all the way to the early in 26 before it broke out. And you know what? Lo and behold, that old resistance that held up for almost a year is now starting to form as support.
Right.
So there you go. I mean, and then if you go to the weeklies, look at these weekly highs in NVIDIA. Is Felicia around today? Because I know she was riding some NVIDIA, and I kept it going up, and I was saying 210, 210. Can it get to 210? Listen to these weekly highs going back to early June, 1271, 1369, 211, 1381, 1439. Yeah, it's 4 points higher than the range that I'm giving you, but it's now 16 points below that. So, you know, there's a lot to, you know, we'll see. We'll see what happens at 190 in NVIDIA. But, Brentster, you want to hit on some other chip stocks and some
well, we can talk SKHY because SKHY has been a disaster here for this market. But really, should it be the disaster that it is? Because when you look here, what the hell was it doing ever trading at $190? I mean, we were talking about this even on the first day. I was trying to predict where, you know, the price was going to be. And I'm like, well, it's 149, the underwritten price, but actually, technically, I was looking, it was trading at 140 when we did the equivalent with the currency in South Korea. Because this wasn't a new IPO, it was an uplisting, meaning there's already listed shares in South Korea. Our shares are 1/10 of the value of the shares that are trading in South Korea, the ADR shares. Well, then it opens and closes at 171, and then the next 2 days goes to 190, even though the stock that was trading in South Korea at like 150. I'm like, why is the arbitrage not working? You know, like, why is this not coming in? And even today, so do you want to know some fun math? Because I was just doing it with Gemini here, and, you know, maybe you can trust Gemini, I don't know. But, you know, it seems to be like, you know, like 99% right most of the time. I had to do the math for this morning. It's still trading because it's fallen so much in South Korea, the shares of SK Hynix. It's still trading with a 28% premium. So at if we're looking at 143 close, no, actually at 136, if we look at the pre-market action at 136, the equivalent ADR price, so we have the ADR over here, the equivalent pricing with 10 ADRs equaling one common share, the raw converted value of the Korean stock in US terms is $106. That's where it's trading on in South Korea right now. That's a 29% premium is where we are trading right now relative to South Korea.
How can regulators let this happen, Dennis? How can regulators let this happen?
Well, it's not about, it's regulators are causing this to happen because you have South Korea and you don't have the mechanism working because it's not easy to go over there and do all the ARBs. So you can't go over and convert the shares. Like with Berk A and Berk B, you can convert. You can actually do the conversion. You know, like the reason, you know, like even the S&P works relative to its 500 is you have a mechanism in place. The high frequency trading, you know, traders are keeping the prices in line, but they can't keep them in line over here because you can't get over there, you know, to, you know, do the conversion. They don't convert. So, I mean, so then it's like, okay, well, they're trading over here and we're giving a premium, but still, shouldn't it be a little bit closer than 29%? I mean, person on CNBC, excellent point making last night. He's like, why in the hell would you buy SKHY over here when you can go in some places in some brokerage and actually go buy the South Korean shares an equivalent of $106? He's like, it's a way better deal. So that's showing, you know, that the market itself, you know, is not even, it's just all hype and BS to a certain extent because we're not even close to where this stock should be trading.
Boy, it lost its luster here, trading down again, down 618.
At 136, but right now the equivalent, because we tanked again last night in South Korea, is 106. We got to drop $30 to be back in line. Is it going to come back in line? It may trade at a premium always because probably easier to buy and sell. here than it is in South Korea. So I would imagine it's always going to trade with some type of premium, but a 29% premium? That seems ridiculous. And you know what? Everybody who's excited on the first day, do the math. Like I thought the arbitrage mechanism would be a lot closer than that. That's why I was like, when I was doing the math on the first day of trading, I was like, this is at 172? I'm like, what gives here? Well, it's tanking now, but it's still like it's tanking in South Korea too. So the gap still isn't closing that much. And
so South
incredible,
Korea,
the market mechanics.
There's got to be someone doing that. There's got to be some tricky. Someone has to be figuring this out.
Not enough, because people will come in hard for 29%. So it's got to be very tricky to convert. Like you must not be able to do the conversion. Is all I can
at all.
Like at all. So you can't get in there and you can't convert the shares. Like they're not convertible. Probably not convertible. But then not only that, it's like, imagine you're trying to do it and things going up on you. You probably were getting blown out too. You're like, well, shit, this one rally to 170 to 190 makes no sense at all, because it's not trading that much up in South Korea here. So the question is, should it trade at 29% premium relative to the shares in South Korea? I would say the answer is no.
All right. I know I left during earnings.
Irrational exuberance is where we were taking that conversation.
Oh my gosh.
We had a lot, little Alan Greenspan in there. We had a lot of maybe irrational
let's not
exuberance.
Get too complicated, Dennis.
In these new /uplisting. I mean, SpaceX has been an epic disaster here. My buddy Mike just texted me, and I did see this headline yesterday that SpaceX is now down the full value of a Tesla. Like the full market cap of Tesla here. It's down over $1 trillion from the highs. 109 here this morning. It's an epic disaster here. I still like SpaceX long term, but I want to load up under I don't know. I was saying under 100. I don't know. Maybe you got to keep backing it down here. Eventually, I'll miss it because I'll get cheaper, and not get it. But I think if you got this for 5 years, I think you'll be okay at 109.
I don't want to hear the 5 years.
But the valuation is terrible.
I don't want to hear Dennis, I don't want to hear the 5-year horizon anymore.
You don't want to 5 years. You want 5-minute horizons.
I want to know
5-minute horizons.
5 minute. I'm 5 second.
5 second.
I'm going to turn my portfolio into a high frequency trading portfolio, and it's just going to trade on milliseconds.
You can do that actually just by buying VIRT. If you want to trade with high frequency traders, Doug Sifu, Virtu Financial, VIRT. Stock's done pretty damn good. Dougie's done a pretty good job with it. Is it Citadel? No, but it's like a lot of similar businesses here. VIRT. That's been the way to play that. So you can do it. Maybe they'll figure out how to do that arbitrage between SK Hynix. And if anybody can figure it out, it'll be Kenny the Goat if you go over to Citadel or Virtu.
I'd be all in on that stock. Okay. Earnings. Let's talk about it. We got some big
We didn't give Johnson & Johnson. No earnings. Johnson & Johnson, the big settlement of the day. No earnings. I'm saying no earnings. Denied.
Request
Johnson
denied.
& Johnson was the big story from last night that nobody's talking about here. A talc settlement. The case has been going on for 15 years. They think they finally have it settled. Johnson & Johnson official press release. Sum it up for us, Brentster.
J&J, here is the press release. They announce a proposed resolution of ovarian talc litigation. Dennis, I think you thought a notable part was this section right here, ? Requires and is conditioned on the participation of lead plaintiff firms in all ovarian talc pending, representing at least 95% of the remaining claims, calls for per claim payments with a $5.5 billion commitment by the company and the first payment of no more than $3 billion to be made in 2027 and no additional payments due before 2028. Triple D, you were doing a little bit of math here.
Yeah.
What did the math reveal about this J&J case, which has been going on for 20 years? I'm guessing
there's somewhere around 76,000 cases. And in these 76,000 cases, 95% of the defendants actually developed ovarian cancer. So imagine using baby powder, and then you got ovarian cancer by using the baby powder. That sounds really bad. And that's why this case has been so many headlines. It's been the underlying, reason that Johnson & Johnson, for a long time, the stock was held back. But, the stock's been on fire, in the last year. It's been moving up. But, I mean, you have 76,000 cases here, and you're going to try to sell this for $5.5 billion. So doing the quick math, $5.5 billion divided by 76,000, that gives you $72,000 a case. So you're telling me Johnson & Johnson, these defendants are going to settle for $72,000 each after your product caused them to develop ovarian cancer? Sounds pretty low to me. If they can settle this for $5.5 billion, hats off to the lawyers at Johnson & Johnson, because that is a gift. You know, $70,000. I mean, it's all about the money. We can say it's not about the money. It's about the money. Like these people, some of these people died. Like it is about the money. I mean, $70,000 is not what it used to be. $70,000, you know, is like basically, you know, less than a year of income for a lot of people. That it's hard to even pay your bills in most cities. So, I mean, seems low to me. The settlement number seems low, but man, if they agree to this, but even when you settle for $72,000 each, what's the legal take on this? What's the lawyer's take on this? It's going to be a chunk. This thing's been going on for 15 years. Are they even going to get 50 grand a piece? Are they even going to get 50? Like, yeah, there you go. Are they even going to get 50? 50,000? I got ovarian cancer from using your talcum powder. You give me 50 grand? They have to get, in order to get this, it's in the press release, they have to get 95% of defendants to say yes. I don't think they're going to be 95% say yes to this. I wouldn't say yes, but maybe they will. Maybe they will. Maybe they felt it out and they think they're going to settle for this. This does not sound great. Like, this does not sound like a great settlement for the people. It sounds like an awesome settlement for Johnson & Johnson. So that's why the stock popped so tremendously last night. If you look at the pop, this went to 281 last night on this news. Algos just go nuts. They're like, oh my God, Johnson & Johnson settlement. They take it from 265 to 281 in like a split millisecond. I'm like, are you kidding me? 281?
I see 280. I see 280.
Okay, 280, whatever. Nickel and dime me for the buck.
No, I'm sorry. I want to.
It might be 280. I saw 280.
Because, I mean, I don't know anything about the case. I don't know. I've been talking about it, listened to it for 20 years. I'm looking at this chart. This thing was what? Under 240, near 240, 242, 245 back on July 25th. And this just hit 280. The former all-time high is 269.43. You're still trading above that. I don't know. I mean, this big old thick stock trade. I mean, I wouldn't, not investment advice. I wouldn't sell the open or short the open, but I wouldn't buy the open. There's no way you could get me to buy this stock up $5.50 and ride it.
It's a great settlement. If they actually get it settled, it's probably worth $5.50 if this actually occurs. But we have heard rumors of them trying to settle this before, and then it didn't work out. I'm just saying, I don't know if this one's going to work out either. Johnson & Johnson's very optimistic, or they wouldn't have put a press release there. But, you know, this was the hangover there. Like some people were saying that, you know, this could be big enough that could be in the hundreds of billions of dollars and could actually bankrupt Johnson & Johnson. Obviously, that's, you know, was overdone. But at $5 billion, this is a drop in the bucket for Johnson & Johnson. You want to know the market cap of J&J? Let's just go do it for fun to tell you how small this is. Like if they can settle this for $5 billion, you hit the bid all day long. Johnson & Johnson market cap is $640 billion. Oh it's not even 1% of their market cap. This is the biggest lawsuit in like the history of lawsuits, you know, like talking about, you know, at least in the pharma industry here. We're going on for 15 years and they're going to cost them 1% of their market cap. This is an unbelievable job by the Johnson & Johnson lawyers if they actually get 95% of the plaintiffs to sign off on this.
Well, remains to be seen. I will just say the all-time high is 269.43. If you had a target or we're looking at the 270 area, here's your opportunity to do it. Also, just a really nice run into this. You know, maybe the market dynamics helped it, but very, very unusual move here for Johnson & Johnson. Of course, figuring out the dynamics of the settlement is much more important. But the price action right now, street's liking it.
We do have our guest in background. Is everybody ready for Tom Browne? Here we go. Let's go.
All right, bringing in Tom Browne of the Keeley Gabelli funds. How you doing today, Tom?
Just on mute in the corner. There's a little mute button right in the bottom. You just got to just unmute your. Yeah, you
Sorry about that. Good morning, Joel. Thanks for the welcome. Thanks for your time today.
Yeah, well, we're going to shift gears here just a little bit. We've been talking overall market. We've been talking chip stocks and stuff, but One thing that's been very prominent, we've been talking about, is just like this rotation in this market that just buying and selling. You keeping us up here. I mean, you can call, whatever the pullback from the S&Ps, you can call it a correction, you can whatever consolidation, but money is going other places. And you've had this small cap outperformance. Is it just getting going in your opinion, or is this a short term catch up trade that's going to turn into a long term catch up trade?
Yeah, we'll see. I mean, it's been a long time coming. As a guy who's spent most of his career managing small cap funds, the last 10, 15 years haven't been a lot of fun for us in small cap land. We've been kind of left behind. But, coming into this year, I think we saw four things where we thought there was a pretty good opportunity for small caps to catch up some, right? Is number one is small caps tend to be more focused on the U.S. economy than large caps are. Large caps, on average, 40% of revenue comes from outside the U.S. Small caps is about half of that. And in our view, the U.S. economy was a better place to be than internationally. Since then, with the war in Iran, the spike in oil prices, I think that has become more so, right? That's continued. The second thing we saw is, okay, if you remember at the beginning of the year, we were all thinking that interest rates were going to come down, right? Small cap companies, the ones that have leverage, tend to have more floating rate debt. So interest rates coming down, good for earnings. Probably can toss that one out the window at this point. Third, the environment in Washington had been changing, since Trump came in. Less regulation, right? And that helps small caps for two reasons. Number one is a lot of regulation doesn't really scale. So a lot of regulation falls harder on smaller companies than it does on larger companies. And then the second part of it is, there's clearly a different view on antitrust, right? And small cap companies tend to be targets, not acquirers. And so when you see a big M&A wave, you tend to see small caps do better. And then finally, at the beginning of the year, and I think we've seen that, so that's been confirmed. And then finally, at the beginning of the year and currently, small caps are at a really big discount to large caps. I mean, if you look at the S&P 500, 20 and a half times earnings, the average over the last 20 years is 17. So you're about one standard deviation higher than your average valuation. Small caps, on the other hand, 16 and a half times earnings. Average over the last 20 years is 18 times. So small caps are not only cheap on a relative basis, they're cheap relative to their history. So, I think this could go on for quite some time. The last time we really saw small caps outperformed by a lot was in the early 2000s, right? Coming out of 99, 2000, small caps outperformed until 2007. So if this gets going, this could last a few years.
That's interesting with the small cap outperformance after the tech bubble burst, because a lot of people are like comparing this market to 1999, where we had this incredible run here in the hardware names. SanDisk up 2,000% the last year, Micron up 1,000% last year, many other stocks up 300-400%, hardware names that is. And obviously IWM, it's just made new all-time highs, but it's lagged like you have said. So if we get into a situation where the tech trade starts to come off, does that benefit IWM? Does that benefit the small caps? Does that move money into some other names? Because we know the tech trade is very crowded, and maybe some of that money is looking for a home in other names that aren't super expensive at 16 times earnings.
Right, and it doesn't take much, right? There are several companies, NVIDIA among them, that have a market cap greater than the Russell 2000, right? So you don't need much money coming out of the big stocks going into smaller stocks for them to move quite a lot.
So, okay. Continuing on this conversation here, let's talk about the Fed just briefly, because we got, Fed decision. Potentially, I heard there's as much as a 40% chance it could raise interest rates like right now, which I don't think they're going to raise rates, but obviously interest rates affect small caps because a lot of these companies aren't in strong financial positions. Some of them are, smaller companies that borrow money to obviously fund their operations. So it's a little bit more boring maybe in some of these small caps. How's the interest rate picture look for IWM? And do you think, the Fed actually does raise interest rates here, or is it stay the course?
Generally speaking, I would think that it's hard to make big conclusions on that, but generally speaking, rising rates aren't very good for small caps. Not a lot of data points to that conclusion, but that would be the conclusion. Does the Fed raise rates? Hard to know. I mean, I think we're all guessing. We've got a brand new chairman who doesn't want to signal, right? And so you can say, yeah, he will, yeah, he won't, but there's no track record here, and he's pretty much told you he doesn't want to tell you what he's going to do. So I'm in the same camp as you. I don't think he does, but the level of confidence in that conclusion is not all that high.
Joel, you're on mute. He has to do it. Joel always does it once a show.
All right. So let's talk about not all small caps are created equal, right? And some are in the news more, some are followed more. How about some diamonds in the rough here? What are some of the biggest opportunities, maybe in some underfollowed small caps? You can make sectors if you want to go with, but where are you looking? Where are you looking for underfollowed, undervalued, and underappreciated?
Right. So we have two different strategies that we focus on. The Keeley Small Cap Dividend Value Fund, the Keeley Mid Cap Dividend Fund, and the Keeley Dividend ETF all focus on smaller companies that pay dividends. I'll come back to why that's different and what's interesting about that in a second. The other strategy focuses on companies undergoing substantial corporate change, things like spin-offs, companies emerging from bankruptcy, demutualization, lots of areas where there's a lot of complexity, right? The central theme among those two different themes is that these are areas that other people aren't necessarily looking very much. So I think it's pretty obvious why substantial corporate change as a theme is an area where people aren't looking. It's complex. You don't have a whole lot of data. You have to make a little bit of a leap of faith. But over time, things like spin-offs have performed extremely well relative to other opportunities in the small cap market and even the large cap market. Dividends, a little bit different, right? Is the dividends, when I first started managing a dividend fund 17 years ago, friends who were also small cap investors would say, like, why? Well, what's the point? If a company doesn't have anything better to do than return my cash to me, why invest in that? Well, if you think about it, right? If a smaller company pays a dividend, they're telling you three things about the company, right? Number one, they're saying that, we have sustainable free cash flow. Number two, because they're making this long-term financial commitment that they're really loath to cut, right? Dividend cuts are a bad sign. And then three, they're telling you, we understand who owns the company. Well, that's not a bad starting place for an investment, right? Is a company that generates free cash flow, that finances itself conservatively, and that where the owners or the managers and the board understand who owns the company, those are all positives. So we're not chasing yield, right? But interestingly, these days, small caps yield more than large caps, right? The S&P 500 has a dividend yield of about 1.2%. The Russell's closer to 2%. So, and then Russell value, which is where we kind of trade, is over 2%. So there's a lot of value in there these days. So those are the general areas that we look at. And we think it's different. Not a lot of people are doing it, and it's worked. I mean, it provides very good downside protection. The dividend strategies tend to provide pretty good downside protection.
Tom, overall, this market has been driven by story. It's like the sexy AI story driving the bus here for the last year and a half. hardware names, obviously NVIDIA, started it all, and then you've had AMD recently. I mean, it's always been driven by story. The one problem with the small caps is like the story aspect, because even in the IWM, there's 2,000 companies there, and there's some individuals, cool little stories, I'm sure, but it's hard to like get going because a lot of these companies just aren't known. Like a lot of the companies that are in these small caps just don't have, they might have good stories and sexy stories, but they're just not known. How does like these smaller companies get more exposure so that they actually investors find out about them to actually come and invest in them?
Well, I mean, some of them, produce explosive growth. If you mentioned SanDisk before, SanDisk is up 5,000% over the last year or so. SanDisk was a spinoff from Western Digital, right? So that's one way. We've had some successful investments in construction-oriented companies. A company like Everest. Everest was spun out of MD Resources. MD Resources is a utility. But over the last couple of years, you've seen this real strong demand for building, in particular, data centers. Everest does a lot of indoor construction, meaning electrical work, HVAC work, and so those kinds of companies, if you buy great companies that do something that's valuable to their customers, investors eventually find them. And yeah, if it's been easy and the story just by the AI stops working and people have to look further afield, they're going to find some of our names.
Okay. All right. We want to get to some earnings here. We got a great perspective on small caps. I got some more questions for you. We'll get you back on again to talk about this important sector in the markets. Thomas Browne, Keeley, Gabelli Funds joining us here on Pre-Market Prep. Thanks, Thomas.
Thanks, Joel. Thanks, Dennis. Have a great day.
Appreciate it.
Take care.
All right. Dennis is chomping at the bits. GLW.
Yeah.
Hammered.
I mean, this is, been one of those stocks that, obviously glass and it's kind of tied up in the hardware trade. Stocks went from $50 to $250 in the last year and just got cut in half. Amazingly, in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. In 18 trading days, the stock just fell by 55%.
Oh.
It's crazy how hot this trade was and how ice cold it just happened. And I would go as far as this is the worst day for it to report. Hardware is absolutely hammered. And GLW comes out with earnings here. And Brentster, give us the earnings here because they weren't even that bad.
They weren't bad, but they weren't great. They were better than inline, but not by much. They reported Q2 earnings around 78 cents. Analysts were at 75 cents. Sales did beat 4.74 billion. Analysts were looking for about 4.6 billion. They gave Q3 guidance, and it was kind of the same story. Their earnings guidance was fine, but their sales guidance wasn't that great. They're expecting Q3 earnings 85 to 89 cents. Analysts are around 85. Sales expected 4.9 to 5 billion. Analysts
Just
are
in
up
line.
closer to 5 billion. Yeah, just in line.
Yeah,
there for
just in
GLW.
line. And then not that
Yeah.
it trades at a crazy valuation. When you look at it here, GLW's trading, if you take the forward, let's just say they make, well, I guess it's 75 cents. They just made 78. So it's, did they give full year guidance on the earnings? Maybe they haven't given that yet. That might come on the call.
So. I don't think so, but let me look.
Okay.
They didn't give, and they didn't mention that they are going to give it. So we are unsure here.
Yeah. I mean, if you take the 118 divided by, like, if we say they're going to make, and I'm just guessing here, if you just multiply it times 4, just do it simply, divided by 118, well, the current price, 118 divided by 75. Let's call it $3. And that's 39 times earnings. I mean, I don't know, like, it's not cheap. This is still a glass maker. So this is not cheap. I mean, if they can hit, if the guidance would have went up, I mean, then it makes some sense. But if the growth isn't there, you're paying 39 times earnings. I mean, at 25 times earnings, it gets interesting, but that's probably down near like $80. So, I mean, this is just unbelievable. This kind of like why was people paying? You got to ask yourself a question. Why were people paying $271 for the stock? This is like these moves, like you just got to stop and like maybe just think about it here. Here's a stock that is traded between like $17 and $50 for a decade, and then it goes from 50 to 250. Sometimes you just got to say thank you very much. I just got 20 years of gains in a year, and I'm going to take them. Like maybe that's where it's at, or maybe it's just going to be the story. And I just think this is just we just got irrational on so many of these stocks. We're just buying hardware names across the board, no matter what. It's a hardware name, and we're just going to buy it up and up and up. And a lot of companies maybe just didn't have the explosive growth that Micron SanDisk did. And I think that's what companies, that's what the stock market was expecting. Micron SanDisk explosive growth with GLW's hardware, it's going to get explosive growth too, and we just haven't seen that.
I think the relationship with Apple built a premium into the stock. And I think 2, memory names were leading the space. Optical names got bucketed in with memory names for better or for worse. And Glassworks here, again, for better or for worse, meaning whether it's justified or not. I think a name like Corning, which does have some exposure to some of the infrastructure and data centers, maybe optical a little bit. I think they all kind of got clumped together. Memory, optical, Glassworks was tossed in there too.
Yeah, like if you don't show us explosive growth in your earnings report, you're dead, because these companies were pricing in for explosive growth. I mean, even the Celestica report, which was actually, the guidance was really good.
Really
just
good.
Compare it. Go do Celestica just to compare here, Joel, and then or Brent, and then we'll have Joel break down the technicals of both these stocks together. But Celestica, completely different story here. Here's the stocks went from $12 to $400, but they are showing explosive growth. But stock's still down anyways, because they just are scared of hardware names now. What were the earnings here?
When we were reporting the CLS results in the think tank last night, I was like, these are blowout results. This is pretty much blowout. They reported 254. Analysts were down under 230. Their sales coming in at about 4.7 billion. Analysts were under 4.4 billion. They raised their guidance. Their new sales guidance is in the range of 19 to 20.5 billion. Analysts are all the way down around 19 billion. Again, I think this was pretty much like a blowout report from Celestica, and the stock is trading up extremely modestly. It actually traded lower, I think, earlier.
Yeah, well, it did, and it gave it all back. I mean, that's just telling you how tough a tape it is, because if you just said other things being equal, this is a stock just blew earnings right away. But it doesn't matter, because we've turned, the sentiment towards the whole hardware trade has turned very violently. It really started, in June, but turned violent kind of in July, where we really started to see the sell-off in the Microns and SanDisk accelerate here. And that has just brought down Celestica here as well now. It's trying to trade higher here, but it's just the wrong day for it to report. Joe, what do you think on the technicals on both?
Oh, boy, I just spent that whole time trying to look at the technicals on this thing. It blew away the expected move of 1352. That thing closed at 143. So 130 you can now will act as resistance, I guess, because it's the bottom of the expected move. Option guys are scrambling. You crack the 50-day, and sometimes they tease you a little bit and they get back above it. No can do on that. Crack the 50-day. Then all of a sudden you're at the 200-day. Now you're 14 points below the 200-day.
What do they say? Nothing good happens.
I don't. Yeah. So I think, and then I'm looking at the weeklies. I'm like, well, there was a monthly low at like week 120. So, going all the way back, he had this area looks like a bit of an interest to me. And the only reason it looks an area of interest to me is if I was short and I was looking to bring it in between this area, because there's a lot of price memory here. This is the 120 low, couple of other lows between like 120 and 125. So if I had a nice little short on and say, okay, what do you guys want to do at 120? It's below the pre-market low. But man, if you're not in this, you want to be like a serious investor and follow the rules. See if you can get back to that 200-day, and that right now that's 14 points away to keep yourself out of trouble. On that. But boy, oh boy, what a tank job, and market's up a little bit, it's down that much, so
Just too
given.
much fluff in so many of these names. Like it got, where these stocks were driven by a fundamental story and started, but then it just got the momentum got with these things. And the algos, get all antsy in their pantsy and they just keep buying and buying and buying relentlessly here. And the relentless bid was not justified by fundamentals. And what we say is fundamentals don't matter at all when the story is hot. Unfortunately for GLW, the story has gone ice cold. So fundamentals do matter. And you look at this report and you see nothing like awesome about it. What about Celestica CLS?
Which has, we should say has, you can see on the left chart there, has climbed back quite a bit, 27 points. It's still down, like a good 23 points from where we were trading right after the report.
You know what I would say in this, because this is, if you look at this is an ugly looking weekly chart too. I mean, there's nothing pretty about this. 470 down to 280. Right now, if I was in this or wanted to get in this, I think it'd be very important to hold this exactly where it's trading right now. How's that for an exact number? There's your 200-day moving average. It's up 676. If this is giddy up, let's go. Let's retrace some of this disastrous move from 470 to 280. First things first is like not just climbing it over today, but like establish some lows above it, establish some closes above it, show that people are interested in buying this at the 200-day. Right now, we do not have evidence to support that. If you do find that evidence, why not go kiss the 50-day at 360-160? So let's see if it can hang in there today. Right now, trading at its 50-day moving average.
I mean, July has just been the month more where the value trade has gotten hot here again. And it's been defensive names, it's been stocks, that maybe don't have the sexiest story here, but have good cash flows that have really, excelled here. Even Brick.B, starting to perk up here. But the financials, have been unbelievable. XLF, new 52-week highs again here this morning. So there are names that are doing really well. We were pointing out like Best Buy. One of our guests pointed out yesterday. I mean, here's a stock that doesn't have a sexy story at all, but oh my God, like the stock's from 60 to 90 because it had a P of 5 and 6. Like at some point in time, some of these P's just don't make any sense or too low. I mean, General Motors is exploding now here at 2 Joel, GM, new 52-week high. So it's not like this market is, rolling over. It's the opposite here.
Yeah.
They're rolling into different stocks. And that's why the S&P continues to remain sideways. Other things are not. RSP is trying to make new highs here now. So we are seeing strength in other sectors, but SPY itself wants to keep going sideways because whatever reason, all the balancing act in here just continues to happen on both the upside and the downside. But, there's a lot of names here that, have, been left in the dust here with the Microns and the SanDisk. And those names are the names starting to perk up here a bit. Could there be, other value trades? Like if GM's moving, does Ford start going here now? Do we start seeing life there as well? I mean, lower oil prices is good for that too. There's lots of, potential here. Boeing's been killed. It just reported earnings here this morning. There's, been a lot of other names that have really started to like show life here lately.
Well, the GM move is very explainable. Dana's been working there for several years and just got a major promotion yesterday over at GM. So that's easily explained.
Cool.
Real quick, I know we're getting a 5 o'clock news dump or 9 o'clock news dump here.
Sure.
One of the last things that I asked Ryan when he was on last time was like, what would make you worry? Like where, what would you see? And what he said is if like a lot of the like laggards and a lot of the value stocks start leading the market. And that's what, when people start to get very defensive. XLP has moved up a little bit. Berkshire Hathaway has moved up a little bit, but that's just this market, it just, okay, well, we're going to soft tech a little bit, but we're going to buy value. And
it refuses cash. It absolutely refuses to
exactly.
Go to
cash is not an asset, except for me.
I mean,
go ahead, Triple.
I was just going to say, this has been the market that if you've been in cash, you've been punished for it. We saw, what's happened. Somebody was saying, the US dollar has been devalued by 40% since COVID. I would argue that's on the CPI numbers, which are BS. So it's been devalued even more than that. You think your purchasing power, your dollar's only down 40% since COVID? Shit's doubled, man. Like a lot of things have doubled in price. So, I mean, you've probably been devalued much more than even 40% since COVID, which is crazy. In 6 years, So if you're sitting here in cash, you're just screwed. So, I mean, this is why, you've got to continue. Money managers have been continuing to buy assets here because inflation continues to come. Now, I still believe going forward that AI might flip that around and AI might cause deflation. If that happens, then all of a sudden cash is going to be the best asset to be in. I don't know the timing for that, though. It's obviously not happening here. We got a Fed decision coming tomorrow where they may actually raise interest rates because obviously, the oil crisis and the gasoline and going up and, inflationary pressures, even, the spend from that. But I mean, doesn't sound like deflation's coming anytime soon. So investing cash at this point has been the wrong place to be.
I just looked at the CME FedWatch tool about 10 minutes ago, and we show a 34% chance of a rate hike announced tomorrow. This Fed decision is starting today, and we're going to get the Fed meeting is starting today, and we're going to get the decision tomorrow for the September 16th meeting. That's the next Fed meeting after the meeting that starts today, and we'll get the decision tomorrow. We're showing an 80% chance of rate hikes in just a couple months here. The only news item that I wanted to highlight here from the 9 a.m. news dump was on Workhorse, WKHS. This is a company that is in the mobility space. They announce, as a function of what's happening in the overall market, is also why I'm highlighting this. Workhorse announces a planned entry into mobile AI data center category. The company is going to be creating a turnkey, compute-ready, containerized mobile AI data center product where they're going to be able to provide compute in this way. This is a mobility company. This is a company that is doing stuff for the auto industry, and here they are saying, okay, yes, we need to be providing some of this compute to other sources. Kind of interesting. The stock did move a little bit higher on it. Not normally an item we would highlight, but I think it is notable if a company like Workhorse is doing something like this.
Well, they're trying to find their way. The stock's just lost its luster and trying to find its way. Another headline that is moving stocks right now, breaking after 9 o'clock, but breaking, Newsmax strikes an AI content deal with Meta, NMAX. So NMAX is up 9% here right now, striking a new AI content deal with Meta. Meta's popping back here too. I own some Meta. It's been ugly. It's been an ugly place to be. It continues to not perform here. Obviously, the CapEx spend is killing them as well. But NMAX, popping up here on this. This has been an awful investment too, Newsmax. But maybe this kickstarts it for a few minutes, anyways.
What was the symbol on that one?
N Newsmax.
Nancy
Mike
Alpha X-ray.
Oh, I forgot about that. Isn't Workhorse the one that like pushed the truck up a hill or down a hill?
No, don't start bad rumors. That was Nikola.
Okay, I'm sorry.
No, Workhorse was the one that was trying to get the contract with U.S. Postal Service. Then they didn't get that contract, I think, or maybe they got a piece of it, but it just didn't work out. It was a great stock. We were trading that in back 2000. Everything was great in 2020. All these stocks, stories, sexy stories going here. Money Mitch's was one of his, story stocks from 2020. We really went up. But then, story, obviously, you've got story and story goes cold. You got fundamentals, and the fundamentals never worked out.
What was the original SPAC that Kenny talked about?
I think that was Nikola.
No,
it was IN. Wasn't it like IN? I don't remember the thing. Was the symbol of the SPAC itself?
Did it have a V in it?
Yeah. But anyways, I think it turned into Nikola.
Oh, really?
NKLA. And obviously that story didn't work out.
If anybody,
the problem with the SPACs, we said it again. Eric Kroll says it again. Most of these things break the $10 and eventually, just continue to leak away. SPACs have just been not the best place to be.
Okay, folks, we are going to wrap it up. So glad to be back with you all here on this. Looks like trying to be a turnaround Tuesday. Got a lot more to cover, a lot more earnings. We got a Fed decision on Wednesday. We're going to talk economics tomorrow. And we're going to talk with our chief economist at the Stock Trader Network, Blue. Our boy Blue Button returns.
You're my boy, Blue. You're my boy.
So Jay Rice says VHS, but it was like, was it Viking? It was, that's going to bother me like all day with that.
Just go ask Gemini.
We'll figure it out.
Go ask Gemini. Folks, glad to be back. Market coverage continues nonstop on the Stock Trading Network. Join us now or join us later.
Thanks for watching Pre-Market Prep. Hit like, hit subscribe. Join the SCN think tank at stocktradernetwork.com.